As soon as you get a credit card, you're entering into a disastrous place. I have a bunch of credit cards. You shouldn't use money that you don't have.
Hey guys, welcome back to the channel. So I'm sure you've all heard this before.
Credit cards are bad and you should always pay for things in cash.
But then why do the wealthy often use their credit cards for all of their expenses, flaunting their Amex at the best restaurants in town, with cards that have minimum spend requirements in the thousands of dollars every year, when seemingly they don't need to? In this video I'll be covering 5 reasons why having a credit card may actually be in your favor, in complete contrast to the narrative we've been fed all of our lives. But before we get into it, please make sure to hit the subscribe button down below if you enjoy this video. Do note, however, that the points I'll be covering come from the assumption the card is paid in full at the end of every billing period and is not used for any unnecessary expenditure that wouldn't have been made if you didn't have the card. Let's get into it. The first way to make money from credit cards is sign-on benefits. When you sign up for a new card, generally you'll be offered some sweet benefits for signing up. With so many credit card offerings on the market, this is how they attract new customers, to our advantage. These benefits can include shopping vouchers, luggage bags, free air miles, insurances, airport lounge access, or even cold hard cash. When I lived in Singapore, Citibank once offered me $200 in grocery vouchers for signing up, and while in that case I didn't have a minimum spend, oftentimes they will, so just make sure you're aware of this when you're browsing sign-up offers. The second way to make money from credit cards is by having a credit float. Now this point may be controversial, as without proper controls, this can easily get out of hand, and I'd only recommend it to those who closely monitor their income and spending and are absolutely sure they can repay the bill each month. Now a float is essentially a term for when you use the bank's money to pay your outgoings, with the anticipation that by the time you need to repay the borrowed amount, you'd have earned enough to pay this off in full. Now this shouldn't be a foreign concept to those of you in business, as this is often used by businesses to manage cash flow to ensure cash comes in from sales before having to pay suppliers. To illustrate how this works, I've created a diagram to break it down. As of January 1st, we have $25,000 in the bank. We earn $10,000 on the 1st of every month, with monthly expenses of $5,000. If we use cash, our bank balance is depleted throughout the month as we spend on expenses. If we use a credit card, those expenses instead accumulate and we are only charged in the following month. Thus we hold our cash for longer and our bank balance remains at $25,000 for the whole of January. On February 1st, we received our next paycheck of $10,000, but we also receive our credit card bill from January of $5,000. which we must pay in full at that time to ensure the funds are available, as they may not be later in the month. To put it simply, we're using February's income received on the 1st of February to pay for the expenses incurred in January, and in doing so, we hold our money for longer and earn more interest. Bank interest is generally calculated on the daily running balance. As such, having a higher bank balance throughout the month will result in a larger interest payment, as you can see from this example. Again, I must caution, if you cannot control your urge to spend, have an inconsistent salary amount, don't often check your account balances to keep on top of this, you should absolutely avoid this strategy as the risk outweighs the reward. I personally use this strategy as it allows me to reinvest either into the market or hold emergency funds with the float, and I know that I can manage the risk, so just be mindful about this. The third way to make money from credit cards is security. So how many of us recently watched The Tinder Swindler on Netflix? Now that might be a far-fetched example. However, imagine if the victims of that crime were able to ring the bank and cancel the money transfers. Well, this is one of the key benefits of paying for things with a credit card, and is called a chargeback. In 2019, Nielsen estimated that there was over $28 billion in payment fraud globally, with the US being the most prone in the world. If fraud occurs, you are much safer using the credit card, as A, it's the bank's money, B, the card can quickly be cancelled and you can still access your own funds at the bank, C, there's often a time lag for credit payments to the vendor, and D, the Fair Credit Billing Act in the United States limits your liability to $50, with most providers waiving this cost. So though you might not actually make money per se from using this strategy around credit cards, often you can save money if you ever dispute a transaction on your bill. The fourth way to make money using credit cards is credit scores. A credit score is an important metric used by most financial institutions to assess your credit worthiness or ability to repay future debt obligations. In the United States, this is generally a number between 300 and 850. The higher the score, the better one looks to a potential lender. The score is based on one's credit history from a number of sources, including banks, governments, and other lending institutions, and whether the customer was able to repay their loans on time and consistently. Credit cards can be a useful way to grow the score, but only in the case that all bills are paid on time. Paying with a credit card allows you to build a credit history to prove to lenders that you can repay future lending obligations consistently. Think about it. Would the bank rather lend money to someone with no credit history, or someone that has consistently paid off their debts on time over many years? Credit scores are extremely important, particularly when it comes time to buy a home, which for many people will be the largest borrowing in their lifetime. The fifth and final way to make money using credit cards is, of course, user benefits. Now, this should be an obvious one to many of you. Depending on the type of card you have, generally you'll receive either air miles or cashback when purchases are made on the card. Some cards even have special promotions at certain stores, such as Booking.com. Air miles can be used to offset the cost of flights or on their online retail stores, while cashback actually reduces your monthly credit card bill by a certain percentage. The wealthy often have multiple cards, each with their own unique rewards benefits. A former colleague of mine in Singapore actually had 27 cards stacked on his desk, each of them with their own very specific purpose that was crafted around their user benefits. So there you have it, guys. If you like this video, please make sure to like this video down below, subscribe to the channel, and please, whatever you do, always pay your credit card bills on time. Thanks, and I'll catch you in the next one.